What is up? I hope everybody's doing well. I'm coming to you from the car, obviously, today. A little different than, every other video that we've done thus far. The fact of the matter is that my team has been really, really busy over the past couple weeks. What I want to really talk about today in today's video is due diligence and what it is that my team is doing during due diligence, how we're making sure that we're moving forward with a good investment, what we're doing while we're under contract to minimize and mitigate the risk that we're getting into in a deal. Before we get into all that though, hey, do me a huge favor, smash that like button. Subscribe to the channel. Okay, we're putting out regular videos, all things real estate, multifamily real estate investing related. If you are interested in this subject, I highly encourage you to go ahead and subscribe to the channel. That way, every time we put out a new video, boom, you'll be notified it. But we obviously would also really appreciate you supporting the channel, giving us a like, sharing the channel with people that you think this might be valuable for, this information. So we just wrapped up Thanksgiving here. My team is not one of those teams that waits until Thanksgiving and then kicks their feet up and goes into like autopilot for the rest of the year. We are an aggressive team. We've got serious goals that we want to hit. We've got a lot of investors that really look to us and rely on us to provide them with some really good alternative investments. So we're out, we're looking at deals, we're making offers, we're submitting LOIs, we're doing everything that we can to end the year 2021 on a really strong note and get our team and all of our investors off to a really strong start come 2022. So right now we have 3 deals under contract that we are working on getting to close. We recently submitted LOIs on 2 other deals that we think we can be really competitive on. We get off all 2 of those other deals, we would have 5 deals that we would be closing early mid Q1 of 2022, over 600 doors, about $65 million assets under management. So we could have a really strong next couple of months. But our job, we have a fiduciary responsibility to every single one of our investors. And this is something that I personally take extremely seriously, as does the rest of our team, okay? We're asking people to invest their hard-earned money in real estate deals with my team, okay? We take that really seriously, okay? We want to make sure that we're doing everything that we possibly can in our power to make sure that we're not getting into deals that are riskier than we intend, right? Every single investment out there, no matter what the asset is, whether you're talking stocks, whether you're talking businesses, whether you're talking real estate, there's a risk reward to everything, okay? As much as I would love to sit here and say that I can guarantee that a deal is going to perform at a certain threshold, I can't. And anybody that ever tells you as an investor they can guarantee you something, you should be going the opposite direction as soon as you possibly can, because there are no guarantees, right? But so if there's no guarantees, what do we do? How do we protect our investors from uncertain and unnecessary risk? So we do a really thorough due diligence process. And the reason I'm talking about this is that we've just done on-site due diligence at 2 deals the week before Thanksgiving. We're doing another due diligence, on-site due diligence inspection here as well. So when we do on-site due diligence, the first thing that we're really doing is a physical inspection of the property, okay? We have toured the asset already. We've been there. We've been able to check out the area. Usually we've got a set of eyes on a property before we submit an offer on it, before we make a really serious play. So we've got a little bit of knowledge, right? But once we get the property under contract, we really, when we were out and we toured the asset initially, we only really got the first layer of the onion, if that. And we've got to pull back multiple layers, okay? So we tour every single unit of the entire property. If it's a 242 unit property, we're going into 242 units, okay? We have an app that we've purchased that helps us to organize all of this and document everything. But so we'll have an entire team of people, myself, my business partners, our property management team, as well as then third parties that are out with us as well. Okay, so we're generally bringing the appropriate tradespeople, licensed contractors, plumbers, electricians, HVAC, roofers, structural engineers. Okay, I'm not going with a put a flashlight on my hat and am looking up in crawl spaces pretending that I know what I'm looking at, right? I've been in real estate for 8 years full time. I've done a lot of deals, but I'm not a licensed structural engineer, right? So we have all of these people go out and assess the entire property top to bottom. We walk the entire exterior of the property. We're looking for landscaping issues that we may need to address, settlement problems that we may be unaware of, retaining walls. We're looking at the roofs. We're looking at the sides of the building. Does everything look straight? We're assessing the parking lot, any driveways, the trees that are overhanging the roofs, right? We're looking at all of these things to double check and make sure, okay, did we know about any issues that we may see? And if we didn't know about those issues, what's the budget going to be to address those items? When we come up with a budget for a renovation for a deal that we're going to do, we always put a buffer in there. So we may have an $800,000 budget and we may put $950,000 in. We'll give ourselves that extra $150,000 buffer, right? Just for stuff that may pop up that we weren't really expecting, like I'm talking about here. Again, we're walking every single one of the units on the property. The great thing about the app that we have is that it has really systemized it. So we're walking in, we're checking the condition of the ceilings, the walls, the trim, the doors, the floors in every single room. What is the condition of the appliances, the sinks, the fixtures, the faucets? What's the furnace look like, right? The hot water heater. We're assessing the condition of every single thing, doorknobs, you name it. We're uncovering literally every single inch of the property because we have got to know what we're dealing with upon acquisition. If we're only able to tour 50% of the units, the seller could theoretically be hiding something in those other half of the units that we were not able to get access to. My team and I actually earlier this year, we totally pulled out of a deal that we were under contract on because we did not like what we discovered during the on-site due diligence process. So we do this really thorough on-site due diligence, physical. We're also then doing an audit of all of the records that we can potentially audit. So this is always entailing a lease audit. So we review every single lease on file to make sure that the lease start, end dates, security deposit amounts, rent amounts, tenants in the property matches up to what we're seeing on the rent roll and what we use the financials in our analysis. Okay, we're double checking all of that. In most cases, we're looking to also do a financial audit. Now, every single seller doesn't go for this, but we're looking at getting our hands on bank statements in order to verify the income and the expense figures that were communicated to us by the broker, by the seller during our analysis. So our objective, again, during due diligence is to identify any potential hiccups or roadblocks. And if there's something that we identify that we have not accounted for, we don't have enough buffer in the instance of a physical renovation, and it throws off our projections, then at that point, we would terminate the deal and we would walk away. It is our belief that sometimes the best deal that you do is the deal that you walk away from. Our objective with these due diligence inspections is to terminate the deal. We're going in looking for things that are wrong, that throw off our projections. And if we can't find one, then that tells us that we've got a pretty good deal and something that we would feel comfortable moving forward with. So I hope that this helps you wrap your head a little bit around what is involved in our due diligence once we get a property under contract. If you have any questions, please don't hesitate to reach out to us. You can see a ton of additional information, a bunch of other videos right here on our YouTube channel. You can also go to our website, investorboardroom.com, where there's a ton of additional free resources. If you're interested in investing with us, just simply let us know and we'll talk and see if we might have a good fit. Have a great day.